Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates. The attention will now all be on the rupee, as major development that came out last night is India's inclusion into the global bond indices. Now, this was something in talks for a long time, and participants have previously speculated on the inclusion, but now it's official. Morning, Pankaj. Very keen to know your thoughts on this. Does this change the narrative of the depreciation pressure faced by the INR?
Thanks, Swaraj. Finally, and I will say finally, after 10 years, I have heard this kind of a view in 2013 when we saw a taper tantrum and there was a crisis on Indian rupee. Uh, Actually, RBI governor and deputy governor Rajan and Patel was thinking and speculating how the flow towards India can be improved. And this was one of the ideas of why Indian bonds are not there in a global bond indices. Uh, After 10 years of efforts, finally this is achieved. RBI, SEBI, and Indian government actually would have achieved this on their terms and conditions. It seems that there would be lots of operational clarity will be required, whether we have accepted to euro clearability, whether we have adjusted the capital gains taxes or not. But this is one significant news which was anticipated, which was expected, and people were looking for almost last 1.5 year after JP Morgan has released a report somewhere in, I think, 21, 22, which mentioning that Indian bonds will be included in global bond index emerging market. So they have actually provided a weightage of 10%, and the flow will basically, the indices will start accruing 1% each month from June 2024. The size of a GBI EM itself is at $270 billion. So India will attract closer to $27 billion in those 10 months. Indirectly, it will have a far-fetching impact on overall markets, flows, and corporate curve. I think indirectly also there will be closer to 20 billion of our flows will come in addition to 27 billion in first 10 to 12 months. So by March 2025, we will have these kind of a flow, and then the 10 to 15, $20 billion, 10 to $20 billion will be additional incremental flows for every year. And this will add and accrue to the BOP. The impact of a Fed hawkish script was limited as the central bank continued to be actively capping the rise in USD INR. Indian RBI was significantly selling dollar yesterday also. However, undercurrent remained bullish as the domestic stocks declined sharply for the second day in succession. I would also say that there's a kind of a, I would say, stretch happening between Indian government and the Canadian government will also be having an impact on the Indian equity market and some kind of impact on the rupee. And that's basically brought RBI much more into the picture. Announcement of inclusion of Indian bonds in JP Morgan EM index was, I would say that it's a short term, yes, we will give us some kind of a cleaning up of the positions will happen because of this. But medium term, it's very positive because flow will happen in medium term, not in short term. It has been also observed in anticipation of this news. Shorts in Indian bond market have been reduced in last, I think, 7-8 days. So there was some kind of a clue that it's happening. We expect that the near-term buying support will come around 80 to 55. And today, I think it will be difficult for dollar to cross 83, 83.05. So a range today can be anticipated 80 to 55 to 83. Now coming back to the global markets, after a very hawkish commentary by Powell, we have seen a good amount of a yield curve upshift in US. More in 5 and 10 and 30 years. 2 years have not moved that much because now market is pricing that the rate cuts will be deferred, and that's the reason 5-year, 10-year, and 30 years are moving higher. 10-year at 4.5, which was last seen in 2007 September, and 30 years at 458, which was seen in April 2011. So there's significant shift of yield curves happened in US. We have seen another market moving news was a Bank of England has halted its long run of interest rate increases yesterday. The economy has been slowing down and inflation has been fallen sharply in the last 2 months. Rates have been maintained at 5.25. However, it was a close call because 4 members of MPC opposed the decision and wanted to raise rates to 5.5, while 5 voted for basically keeping status quo. So that's the reason I think GBP has taken a significant down move. We have seen closer to how much it was, Swaraj? 1.22.
1.2270.
70. We have seen a low of 1.2270. So basically 2270, 2280. So it's a significant fall happened in GBP. As of now, we are not reading that it's a peak rate of a 5-quarter because inflation is still 6%. But what we are seeing is in BOE also is reducing the balance sheet significantly. They have increased now the QT, basically quantitative tightening program, to 1000 billion per month instead of 80 billion per month. So what we are seeing is one side, the central banks have raised rates earlier. Now they are reducing the balance sheet. So liquidity tightening is going to be there in coming days. We are also seeing, okay, there's another rate decision. That rate decision was in, I think, Sweden, and they have kept the rates at 1.75, where basically the consensus was 2%. This was not Sweden, it's a Switzerland National Bank, the CHF. I mixed up. So SNB has kept the rates at 1.75%. Market was pricing that it will be going to 2%. Currencies have seen some consolidation after sharp drop after the Fed decision brought them to the key support levels. Euro at 1.0630 is a very good important level. And today is a Bank of Japan. Bank of Japan decision is there as of now. They are doing a vocal intervention, not a real intervention. Maybe we can see 150 also coming on a USD JPY. The statements would be dovish today. That's all from us today. Thanks a lot. Have a nice weekend.
Thank you, Pankaj. And that was a very well summarized statement, especially when it comes to your expertise in the bond markets. So as you mentioned, that there will be a weightage of 10% for the Indian bonds, and the flows will be accruing 1% each month from June 2024. And very interesting. It's been 10 years in the works by the RBI, SEBI, and the Government of India. When it comes to the global markets, post FOMC, we have been observing the longer tenor yields moving higher, especially 5-year, 10-year, and 30-year yields. Another rate decision which we had yesterday was the Bank of England, which did not hike rates, and GBP fell quite a bit because of this. But inflation remains on the higher side. But as per the latest numbers, it's also falling quite significantly. Switzerland has kept rates unchanged as well. So now the focus will be on the Bank of Japan rate decision. There is a good amount of vocal intervention going on when it comes to the FX, but as and when it is updated, we'll let you guys know. That's it from us today. Thanks for listening. Tune in on Monday for another round of fresh updates. Have a very good weekend. Bye-bye.